10-year note yields end the week moving lower today, closing out at 420. Down on the day, down on the week, and a big move on the week that is. We saw a move over 20 basis points lower from last Friday's close. That's the biggest one-week move lower that we've seen since going back to November. So a big week. Obviously, today's highlight was the PCE data, which came out. That is the Fed's preferred inflation gauge. Didn't come in off expectations, actually hit the bullseye on that. So the market really didn't react there, although later on in the session, we heard from the Atlanta Fed and their GDP now, which highlights first quarter GDP expectations at negative 1.5%. So that sent things higher, prices higher, yields lower, ultimately closing out the week at 420, down big on the day, down bigger on the week. Again, seeing that move 20 basis points lower on the week, the biggest weekly move lower since going back to November. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. And you'll see volatility moved higher, actually got to year-to-date highs in this short-lived 2025 that we've been in, but the highest volatility mark since November of last year. Now, typically we see volatility and yields move in the same direction together. That has not been the case, suggesting that the market did not see this type of move coming. Again, yields lower, volatility higher. Now let's talk about what we have next week. Next week will be all about the jobs market. We get the non-farm payroll number on Friday. Prior to that, we'll get the claims and the ADP and the challenger job cuts. But ultimately, it's Friday's non-farm payroll number that will highlight the week. Although we did get an ad just recently, we did hear now that Fed Chair Powell will be speaking on Friday after the jobs number. Be interesting to see what he says since the last time he spoke to Congress at his semi-annual testimony back in February, earlier in February. He said that inflation was high and that the Fed would need to be on pause for future rate cuts. Well, a lot of that has changed. Obviously, the market now pricing in rate cuts for as soon as June FOMC. So the Fed chair might want to have some talking points ready as to why rate cut odds keep going higher after he said rate cut odds were probably going to be on hold.